Hi and welcome to 3x Financials. Today we are going to talk about optimizing collection control, best practices for non-financial experts to enhance cash flow. So let's dive into this video. So first of all, we have to understand collection control. So the critical role of cash flow. When we talk about cash flow, we refer to the net amount of cash being transferred in and out of a business. Maintaining a positive cash flow ensures company can meet its obligations, reinvest in operations, and support growth initiatives. So neglecting cash flow can lead to financial distress and even if the organization, is profitable on the paper. So let's say that you sell a lot of money, right? But customers start not paying you, or you forgot to invoice, or you forgot to collect. So in paper, you'll see that you have a lot of sales and your company is really profitable. From a financial perspective, you will be in deep trouble because no money is coming into your company. So that's the importance of collection, right? Collection has a critical importance on cash flow, and cash flow has a critical importance on sustainability and growth. So that's why we have to deep dive into collection processes to ensure the maximum efficiency there. So what is accounts receivable? When we talk about collection, we are talking about accounts receivables, and receivables in generally we will say like AR represents the money owed to a company by customers for goods or service delivered. Efficient management of accounts receivable is critical as it directly affects on cash flow, as we have already said, and delayed or missed payments can lead to increased debt and financial stress for the business. So as I told you before, let's say that you you get a new customer comes and tells you, okay, I want to buy $100,000 of products, and it would represent for you a huge growth, since it would be like your largest customer. So you say, okay, yes, let's go, let's do it, and that customer then doesn't pay and start delaying the payment and delaying the payment. So you have to pay your suppliers for the goods that you have sold. You have to pay your employees the salaries. You have to pay everyone, but the customer is not paying you back the debt. So you will end up taking more debt, or taking a loan to pay all the things, and that will get financial stress. So accounts receivable efficient management is key for the health of your business. So what are the objectives of collection control? So the primary goals of collection controls include ensuring timely payment, reducing bad debts, and maintaining healthy customer relationship. And this last part is also important. It's not just a matter of getting paid. It's just a matter of getting paid, but uh, without or ensuring that you will keep on having a good relationship with your customer. And that's something that it's really hard to do. How do you collect money from someone that doesn't want to pay you, or can't pay you, at the same time that you keep a good and healthy relationship? So that's the hard part. So effective collection strategies not only safeguard cash flow but also enhance customer loyalty by fostering open communication and addressing payment issues amicable. So some best practices for optimizing collection control. First of all, establish clear payment terms. Clear payment terms outlines expectations and responsibilities for both parties. Specify payment due dates, acceptable methods, and penalties for late payments to reduce misunderstanding and encourage prompt payments. And this last part, that it's the penalties for late payments, is key. When someone knows that it will have to pay you that he or she will have to pay you an interest if he doesn't pay on time, they will prioritize the debt that they have with you against the debt that we have with other suppliers that maybe don't have those penalties. So establishing late payment penalties will reduce the misunderstanding and encourage prompt payments. And also, if someone doesn't want to include that kind of terms in the agreement, it will also tell you something, right? I mean, why wouldn't you include late payment penalties if you're going to pay me on time, right? Why is it that you don't want these late payments? So doing or putting penalties for late payments, it's really a good practice. Streamline invoicing processes. Once again, when you grow, everything is chaos. And when everything is chaos, you can forget things. And sometimes you can forget things like invoicing to a customer. So utilize electronic invoicing software to reduce errors, send invoices promptly, and track payment status to ensure customers receive all information on time. The customer needs to have the invoice on time, and that invoice must be correct. If the invoice has an error, that will end up with the customer sending it back to you, you having to correct it, and all that is time that will delay the collection process, right? So always try to automate your invoicing process. And then set up automated reminders. There are a lot of tools now where you can set up reminders, like for example ClickUp, right? So automated reminders can help maintain contact with customers regarding upcoming and overdue payments. By sending friendly notifications, businesses can increase the likelihood of receiving payments without manual follow-ups. So let's say that you start so that you use ClickUp, for example. So in ClickUp, you could set up an automatic email that when certain day comes, if the status of the payment is not collected or paid, then it will send an automatic email to your customer, and will also send you an email to you saying that that email was sent to your customer. So that way you will always have control and automated control of the notifications to your customers, and also notifications to you in case you need to follow up manually with your customers. So automated reminders are great for collection efficiency. Techniques for managing accounts receivables. So first of all, monitor customer payment patterns. Regularly analyzing payment patterns enable business to identify reliable customers and those who frequently delay payments. By understanding these dynamics, businesses can tailor their collection strategies to reduce overdue accounts effectively. So let's put an example. Let's say that you have a customer that has money, doesn't have any problems in paying you, but he just have a terribly bad um, administration system. So he does everything manually, and he tends to forget payments. If you know that, and if you monitor your customer payment patterns, and you start to understand that that customer has the money, but he just forgets to pay you, then you could set an automated reminder, or just give him a call on the due date of the payment to say, hey, remember that this invoice due date is today. So he will pay you back, and he will also be grateful with you. I mean, you're you're helping him to organize his finance by giving him that call. If not, he will just forget, and it's not something that he don't want to pay. He just forgets, right? So that's just an example, but you have several situations where monitoring your customer payment patterns can help you collect. Sometimes you have customers that don't want to pay, but you know that if you insist, they will pay. So once again, just insist. And that way you can set up a strategy that is, if it's automated, it's better, but you can set up a strategy for each customer, or for each type of customer, to improve your collection processes. Implement credit checks. So conducting credit checks before extending credit limits can significantly reduce the risk of bad debts. This practice provides insights into customers' creditworthiness and allowing business to make informed decisions regarding payment terms and amounts. So credit checks, I mean, that way you will have like a documented debt, and it will help you to reduce bad debt. I mean, it's just an instrument that you can use to improve your collection. And the last one is to offer discounts for early payments, right? So incentivizing early payments through discounts encourage timely transactions This approach not only improves cash flow but also builds positive relationship with customers who appreciate savings on their expenses. So let's say that you have a customer, that customers say to you, okay, can I pay you in, I don't know, let's say 30 days? And you will say, okay, it's okay if you pay me in 30 days, but if you pay me cash, I can give you a 5% discount. So those kind of practices often helps to increase the collection efficiency. Once again, you have to analyze in terms of cost if you can give that 5% discount, right? I mean, it's not only a matter of collection, but it's also cost involved there. But if you can do it, you can help collection efficiency through discounts for early payments. Ensuring timely payments. So effective communication, regular follow-ups, and utilizing professional services are key to ensuring timely payments from clients. This strategy helps to foster strong relationships and reduce the likelihood of overdue accounts. So effective client communication. Establishing open lines of communication with clients can clarify expectations regarding payment timelines. As we were saying, right? So things like sending automated reminders, um, giving a call to customers that regularly tend to delay their payments. So those practices are key to have a more efficient communication with your client, right? So regularly updating clients on their account status fosters trust, and makes timely payments more likely. Timely follow-ups. Well, once again, right, consistent follow-ups on overdue accounts can significantly reduce bad debt. Sending reminders before due date and following up immediately after missed payments show commitment to collection process. Once again, if you show the customer, if you remind always the customer about the due dates, you will create a better channel of communication. The customer will know that there is a due date there and will pay on time. But sometimes collection gets difficult and it's not as easy as sending a reminder. I mean, there are customers that are harder to collect or that maybe are going through a bad financial situation and they can't pay. So in those cases, you can always utilize collection services. So professional collection services can provide expertise and resources that enhance recovery efforts. These services often employ specific techniques to recover debts while maintaining professional client relationships. They will charge you, of course. I mean, they will charge you. Some charge, 20%, 15%, 30%. But in generally, you will use collection services when you have a customer that has not paid despite all the efforts that you've done. I mean, you've sent automatic reminders, you've called the customer, and time is going by, and you have keep calling, and once and the customer just stop receiving your calls. So, I mean, in those cases, you can always utilize collection service. Once again, they will charge you. You will probably will lose money in terms of that sale, but it will be better to get some part of the money than getting no money at all, right? So utilizing collection service is always good in those cases. Reducing bad debts. So analyze and adjust credit policies. This is a first key to reduce bad debt. So regularly reviewing credit policies ensure they are in line with market conditions and customer profiles. Adjustment to those policies can limit credit risk and improve recovery rates, safeguarding the business against potential losses. So you have to you have to adjust your credit policies according to the customer behavior, right? So if it's a customer that always pays on time and never gives you any problem, and you don't have to send any reminder, and he will already pay, then you can give more credit. If it's a customer that doesn't pay you on time or that tends to delay payments, then you will give him less credit, right? Um, Sometimes it's better to lose a bad customer than to have it. I mean, losing a customer that will ultimately lead you to bad debt will be better than having that customer. Why? Because if you sell something to a customer and that customer never pays you back, you will lose all the cost of goods sold. If you didn't sell that customer anything, you won't be losing anything, right? So when you're looking at your customers' patterns and your customer profiles, make sure to adjust the policies to each customer's profile and to each customer's payment patterns. Recognize warning signs of financial distress. So identifying signs such as delayed payments, frequent disputes, or declining sales can indicate a customer's financial difficulties. Early recognition allows proactive measures to renegotiate terms or pursue collection before debts escalate. So once again, by reviewing the patterns, the behavioral patterns of your customers, you can see or you can know if that customer will pay you, if he will never pay you back, if he's in financial distress, and you can act according to that, right? So that's why it's very important to recognize these warning signs. And be prepared for write-offs strategically. I mean, while no business wants to incur in bad debts, having a strategy for write-offs can minimize their impact. Establish criteria for determining when to write off and consider tax implications to protect the financial health of the organization. So, I mean, there is some cases where it's impossible to collect. I mean, you've tried anything, you've also hired professional services, you are not being able to recover that debt, and it's time to write it off. So if you're going to write it off, be sure that you talk to your accountant to see implications that had in tax and in your cash flow, and be sure that you are writing it off, and that you just and that will harm you the less possible, and you will pay the less taxes possible by writing off that debt, right? So that is something that you have to talk with your accountant. So that's it for this video. I hope you enjoyed and that it was useful for you. As always, if you need any financial advice, or you are getting trouble with your financials, or you want to improve the way you are doing things, you just have to contact us at the contact details in the description of this video. Okay, bye, see you.